Hello everyone and welcome to a new ATFX video. My name is Gonzalo Canete. I'm here to share with you a quick update of the market. Today is Tuesday, 20th of February, and I want to just review with you what was the last movement of the market. It's very interesting. We are ending the session on European markets. It's time to review what happens. Also, keep in mind, before we go to the chart section, keep in mind I publish a fundamental report every morning on ATFX Connect blog. I also shared with you all these comments through a newsletter. So if you want to follow the newsletter or subscribe to the newsletter, you can just contact me on that email, and I will share with you the newsletter for free. And what else? And I think it's time to share the screen and start to take a look on what was the last comments, last news. Let me share the whole screen with you. So I was mentioned here, mainly one thing we need to take in consideration, two factors, two most important factors. I will say the first factor is so far this week, the market, Wall Street has been closing negative. I believe this is still the impact caused by the highest inflation rate unexpected from last week. The expectation of interest rate cuts are moving forward, are actually getting delay on time based on the perception of the market. We also mentioned in our previous videos and previous reports the comments from Federal Reserve officials, just considering the option that the possibility that what it was supposed to be in March by December, remember December 2023, they were discussing about interest rate cuts for March. And at the moment, after all, March is not considered anymore as an option for interest rate cuts. And actually, again, a few different Federal Reserve officials has mentioned the option of the possibility that the interest rate will come after June or July. And we are not talking anymore about 4 interest rate cuts of 25 basic points. We are talking about maybe 2 interest rate cuts of 25 basic points. We still need to wait for PCE inflation indicator by the Federal Reserve publish, the next one, because it's crucial to know that numbers, that number to confirm or discard any real problem with inflation. But so far, the numbers we got from the last week indicates that inflation is getting hard to get decreased, and it's getting sticky inflation, how's it called? Okay. As you can see, the market has been dropping since then. So far this week, we see the market is just moving backwards. We're probably going to see supports again in the area of 5,000 points, because still SP500 mini, SP500 future, the one you got on the screen, let me put the whole screen so you will see in detail, is going to the main all resistance now supports, which is $4,950 50 points, 49.50 for SP500. Nasdaq is dropping as well, as you can see, and it's probably going to the support levels of 17,350, which is actually the 200 moving average period there. So I believe that's probably one of the potential supports the market will gonna find there. Russell 2000 is actually dropping again. I shared with you this chart time ago, and as you can see, it's working really well, and we are almost there, getting into again this old range, which is 2,000 points to 1,650 points on Russell 2000, which reflects the reality of micro system, small middle caps in United States. If we take a look to the German market, we can see that it's also moving backwards from new records last week, 17,150, 189 points on DAX 40. But since then, the market has been moving backwards again. Today, losing 0.21% down. What else? Almost 1% on Nikkei 2. Interesting. That's the second topic I was about to mention to you. Important topic for this week. The last week, it was the lunar year for China. So it was the whole week holidays for the new year in China, South Korea, and most of the Asian economies. Therefore, we got pending to take a look what happens with the stock exchange in China, Hang Seng and Shanghai Composite. So you can see that Hang Seng actually covered the gap. They leave the new year holidays with a kind of bearish gap. but after all has been recovered the price, and is apparently is rising, is doing well. It seems to be trying to recover certain levels, and also escalate about the 55 periods and 200 periods moving average, which is good news. In the case of Shanghai Composite, still I will say the market is trying to rise and return to certain levels. Probably the target is 3,000 points at least in Shanghai Composite. I indicate also to you what was probably the goals if the market keep falling. I also mentioned from the fundamental perspective, I also mentioned to you in the daily macro report that China is still moving forward with new stimulus, is making many steps to improve the situation. China's banks have cut the mortgage reference rate by the largest margin on record. Keep in mind that the main problem of China economy right now is the super massive, highly leveraged real estate and the debt they got it. So that's one of the weakness points of the Chinese economy, and that's why the Chinese government is trying to reinforce exactly that sector on the economy. I believe it's 14%, 20% of the globe of the whole economy of the GDP of China. So it's very important to reinforce that sector. And this is the, as you can see, this is the movements the market is doing, government is doing to reinforce this. This move is seen as a response to the government's efforts to support the real estate market and broader economy. The one-year loan prime rate, LPR, was reduced by 20 basic points to 3.85, while the 5 years LPR was cut by 10 basic points to 4.6. So again, they are cutting the mortgage, they're cutting the interest rates on mortgage. The government decision reduction LPR is consistent with the objectives of maintained reasonable credit growth and stability in the economy. It's anticipated that the large rate drop will lower borrowing costs for buyers. And holding seminars. Okay, we also got certain news in relation with the new head of the China Security Regulator Commission, which is the one who was mainly what we heard last week. It was certain new measures to avoid, for example, forbidden short selling in Chinese stocks. They also put one of the toughest men on as a head of this new Security Regulator Commission, which is Wu Qing, is the ex-head of the stock exchange of Shanghai. And yeah, and I mentioned also a few different topics, few different news. Has Saudi Arabia is actually diversifying the economy and investing a lot in to improve the tourist and industry, internal tourist sector and industry, just to diversify the incomes for the economy. A few projects, and also the impact of Gaza war in Israel GDP. Now, about all those topics, let's take a quick look on the markets. We have seen already equity for Europe, for United States, and also from China, Asia, Japan, Nikkei, and also Hansen and Shanghai Composite. Let's take a look also dollar. Dollar is moving up, and I actually want to share with you one idea, one thing I have been watching closely, which is let me take a look, for example, to this one. This pattern is super important pattern that is apparently indicate that the dollar could rise the coming days, the coming weeks, could rise to 107 points, almost there, 106.50, 107 points, and if that happens, obviously it's gonna pull completely down the euro dollar. My projections is what it was to touch 105, but if you see in long term, I mean, this is the main goal. The price, euro dollar gonna drop, euro gonna drop against dollar lower and lower, probably to the levels of 105. But if you take a look on long term, you will actually find that, look, we are on the top levels of downtrend channel that could move the price even below the parity, and again reflecting a really bad situation in Europe economy against US economy, which makes a lot of sense, because if you go and take a look on what's the growth rate of US economy, is actually 3.3% from Q4 2023. It was 4.9% for Q3 from 2023. while in European economy it's actually in contraction of minus 0.1%. Germany, the first economy in Europe, is dropping 0.3% the GDP. So again, in my eyes, it's so obvious that the capital, the money, gonna move from euro assets to US assets, just because US assets are getting good growth rate, super low unemployment rate, and also the expectations are obviously better from US economy than Europe. Therefore, why you will stay in euro assets? It's just common sense. Now let's take a look. Also, we're talking about the possibility that dollar will rise. In that case, gold will drop. Simply like that. Unless something happens in kind of black swan, which is a war between Israel and Iran, or any other escalation between Russia, NATO, and so on. Unless that scenario happens, gold will tend to move lower and lower, following the dollar rising in this new relation and in this delay of the interest rate cuts by Federal Reserve. In terms of oil, it's very interesting because the price was actually rising the last week, and we take a look closer, we will see that it's moving to certain levels. $83, $85 seems to be a kind of important resistance, and still there is no indicators from a fundamental perspective that give us any vision on why the oil is rising right now. Remember, two factors are moving the oil up. One of them is the geopolitical tension in the Middle East. The second factor is plans or strategies by those ones who produce and commercialize oil, which is mainly head by Saudi Arabia. So far, the cuts on production was not the one they were expecting, and therefore it was actually a factor that was pulling the price down instead of up. There was also another topic we discussed in the previous videos. It was the possibility that actually the global demand is dropping, and therefore, because we are facing a global recession, it means like the economy of China is slowing down. And Europe, it's in a recession. Bundesbank is another report that was mentioned to you in today's report. It's here, according to the Bundesbank, usual monthly report of Europe's largest economy, released on Monday. Germany is most likely in recession. Even the Bundesbank has confirmed this. So if you got Chinese economy in a slowdown and Europe in a recession, the only force that is pushing up is United States economy, and therefore maybe the global demand is getting cooler. So that means that the oil price cannot rise if there is not industrial activity rising behind that. Okay, Bitcoin is another interesting asset to review and has been doing super well. We can see that this is the current situation. In short term, I was watching today this pattern, which is even inviting to the Bitcoin to rise. But as you can see, the pattern has been broken because these new drops are taking the price to the head level. So therefore, there is no shoulder anymore here, and we can discuss the pattern. Okay, I think that's all. I hope you enjoyed this quick review. And remember, if you want to keep update yourself on relation with market, just go to our blog ATFX Connect. You can go to the section of the blog Market Snacks, and you will find there all reports, or you can simply follow ATFX Connect on X, and you will see also the charts I'm sharing with you. And again, if you want to contact me to suggest any other topic or anything you would like to share with me, here's my email. You can contact me. I can also add you on my newsletter completely for free, so you will receive these updates on your email. And that's all. If you appreciate this content and these efforts keeping you updated, please give me a thumb up and subscribe to the channel. Thank you. Bye bye.